welcome to Profiletraders. This is Reza and you're listening to my market analysis for July the 13th. As you all went through a lot of turbulence last week related to the Greece situation, we went home Friday within that uncertain price range where we were stuck for the whole week, and everybody was waiting to pretty much hear the outcome of a potential deal that would strike between Greece and the rest of the European Union bankers in order to save the face. Last night, as we opened with a gap up, there was very little time spent down there before the central bank stepped in and bought and bought and bought the overnight to the upside to the tune of crushing and crashing every single soul that had the audacity to go short this market. Pretty much what the Chinese did by sending police to arrest people that were shorting the market. Here, since we are a little bit more advanced than what they are over there, we don't do that. But we will spend billions upon billions to make sure that anyone that is daring to short the market will learn a very painful lesson. And today, after a massive gap up, they did not even allow more than a buck to the downside before the program buys continued and continued and continued, buying it all the way till the end of the session. If you believe that this is it, over the weekend a dinky little agreement between that far left communist Greek president who is trying to steal the money and not pay back its debt, and the rest of the crook bankers, if you believe that the agreement between these two parties has solved the issue, then you should also believe that we are going to go to the all-time high again. If this was nothing but let's bring it enough up on the slightest volume possible so that the next brick hits the window and breaks it and it starts to fall down, then it falls down from a higher level and therefore the picture looks much less ugly. So now what we have to concern ourselves with is that this could be just a very standard retracement of the leg down. And now this retracement should either stop around here, or if it's going to get really much ugly on the upside, we could go up for a retest of 21.15. At that point, it is going to become very interesting because this week Yellen will be testifying in front of the Congress for 2 days. And during her last idiotic speech on Friday, she, still in the middle of all this crisis, started to mention about rate hikes by the end of this year. If this tone about rate hikes, which I believe is a bluff, is going to continue, and that time we are at 21.15 or 21.16, I believe it should represent a very, very good short opportunity. At the same time, if tomorrow morning we open with a gap up, most likely I will be shorting into that gap, because now if we take the market having gone up from 2053 almost to 2100, we have a 50 points rally behind us, all on this hot air. And this hot air rally can deflate itself in a heartbeat. Therefore, we are approaching extreme levels of resistance, and extreme caution in terms of long position should be exercised here. In terms of resistance, the very first thing that I would like to see for the market to do is to reject below the current day distribution, which has been at 2086. Once we break that, we should then come into this rotation and possibly then stop at 2081. And if we do break 2081, then the drop should be very straightforward towards 2070, because we do not have much of a development in this region here. As for CL, ES is glued to the news of Greece. CL is glued to the news of Iran deal. You know that famous Iran deal? Iran deal that Obama is so obsessed with, the poor man. That Iran deal that has been delayed every goddamn time that they meet. But why would they not delay it? I would be sitting in Austria, somewhere in a beautiful mountain in a big ass resort, drinking champagne with $1,000 bottle of Bordeaux, negotiating. Why not negotiate another year in such an environment where taxpayers are picking up the bills for these useless clowns to negotiate? So now, all eyes on negotiation. The mullahs win the negotiation, which I have a very bad feeling that they will. Price of oil will take a nasty beating. Why? Because they will be allowed to inject about 4 million barrels additional to what they are already allowed to inject into the market on a daily basis. If by any miracle they do not get a deal and there is no negotiation coming to an end, then you should expect oil to spike very hard, because that will open up the door for extremely volatile geopolitical situation already added to the very disastrous Middle East situation that we have in hand, thanks to you know who. So now we are back into this trading range back and forth, and nothing will be settled and nothing will be clear until this bozo clown negotiation is out of the picture and we know what the hell is the outcome of it. Therefore, it is a two-sided market. The runs are fast and they are also reversed almost entirely. Therefore, do not look for directional trade, because it is a two-sided market. You need to take profits in either side which the market is giving you. If you hang in by any direction for too long, it is reversed and you're run over. Big picture, 51.50 to 51.30 is now support against 50.96. Matter of fact, I tried to buy this morning at that level. I didn't get a fill, and I tried to sell the POC up there and I didn't get a fill. And now we are back again into that same exact range from last night. So today high is resistance, near overnight low last night is support, and let's see which side will break depending on what the outcome will be for the Iran deal, the historic deal, I should say. Now for gold. Again, not surprising, it tried to take a beating on the overnight. They tried again into the day, and as it went below the overnight, couldn't find much of a sell pressure and sellers to bring it and challenge this low we have in place at around 11.46. Then we bounced, and now we are back again into the same trading range. So the trading range is very clear. The bottom of it is 11.46 and the top of it is 67.70. Until we do not approach that 11.70, consolidate some around it and then decide to pierce through it, we are going to be into this nasty little back and forth, which in my opinion, for the time being, gold is one of the most difficult, vicious market condition that you can find out there, because it is not responding to what it used to respond. And at the same time, on good news, bad news, most of the time it's been kept under pressure because this asset is a complete direct competition against the US dollar. And the last thing that the Federal Reserve and Yellen wants to see right now is people taking their money out of the dollar and parking it under gold. So whatever can be done to bring gold down and keep it down will be done in order not to entice people to bring their assets out of the dollar and put it under this. For anything bullish to happen, I have to see 1170 break to the upside. Till then, we have this 1140, which I told you from a long time ago that it was our buy zone between 1145 to 1160. That was always been my buy zone, which I gave that chart out many weeks ago. So until it is holding, this could be a long-term picture, triple bottom, and a very serious bottom basing here for gold. If we do break it, my answer to you is that I have no clue where will be next and what do they plan to do with it. So for now, keep an eye on 46 and on the upside 70. Trading range, trading meaning you buy close to bottom of the big range, sell as close as possible to the top of the big range until one of these two sides decide to exit. With that said, have a great evening. This was Reza with Profile Traders. Talk to you tomorrow.